I'm Jagir, and in today's video we're going to do an update on Harmony. Harmony has been just powerhousing it over the last few days, making new highs. It's looking very healthy. I've taken a long position on Harmony, which means I've bought going for the upside with some good returns so far. However, we need to be very objective and not be biased. You know, when you're taking a position, obviously you want the best for your position, you want to make profits, but we also need to do objective analysis with Elliot wave and Fibonacci theory so we can see what's likely to occur, so we can plan and manage our emotions. Also, we can plan and manage our positions. So Harmony's in a very tight spot at the moment, and we have to make a decision, and I'm going to show you right now. So just a quick reminder and a recap. We did an analysis on Harmony. If you saw my video on, I believe it was the 14th of May or so, and we came to this nice point here. Let me just click one more bar. It was beautiful 1, 2, 3, 4, 5 of what we saw as a wave 1, and the textbook ABC hit time, price, momentum, everything else. And then it made on a lesser degree this wave 1 and wave 2. And what we expect is a wave 3, which tends to be very bullish, and that's where you can make some amazing profits. So then this green line down here, if I just zoom in and just scroll it to the left, just make it a bit wider as well. This is the area that we're going to focus on. This green line is where I put a long order, meaning a buy order, and my stop loss was down here. So this is my risk. And my risk reward for the projection of a wave 3 high, I believe, was something like a 15 to 16x, so 15 to 1600% return potential, and even higher. So that's the return that I'm expecting on this. So the following day, so let me just put this here so we can see. The 14th we got triggered in, which is great. We had a really bullish bar. We went higher than this wave 1 high, which is the first confirmation of this particular micro wave 2. So we can be confident that our stop loss is quite safe. If the market does go below this, we need to just reevaluate and look at the price chart and see if there's any decision that we need to make. But the probability is in our favor that we should go on to make new highs. The momentum made a bullish reversal, which is positive again for us. And so this is on a daily chart. So this is on the 15th. Then the following day we had, let me just make sure it's here. A bit of a pullback, which is what we expect, and then a bit more of a pullback. And here we are today, and today we just have another bullish bar. So are we going to go on to make new highs, or are we going to see a bit of a correction? So this is where it's tough, right? Because look, I bought into this position. Obviously, I want the market to go up and up and up and up. And I love Harmony. I think it's brilliant, producing some great profits. Haven't locked it in yet because I haven't moved my stop loss and I haven't exited any of my position. So, but this is where we need to be objective. So let's jump into a 4-hour chart. So a 4-hour chart where every bar represents 4 hours. So sorry, let me just refer to one thing again on the daily chart. Daily chart, the momentum is now, if I just go here, yeah, it's now bearish, where the blue line has crossed below the red line. And this momentum indicator, if I just zoom in here, this has crossed. That's a bearish sign, say that we might see the momentum go to the downside before we see new highs again. So we want to take that into account. But on the 4-hour chart, are we seeing a pattern unfold? And can we look at it objectively and not with cognitive dissonance, which is like your bias, because what you want to happen. So I want it just to go up and up and up. But can we look at it objectively? So this is what I'm seeing with my objective eye. There's 2 potential wave counts that I'm seeing. It could be a 1, 2, 3, 4, and we're coming up to this 5. But looking at the momentum, what's likely, more likely, if we jump into a 1-hour chart where the lesser degree becomes more clear, if I just readjust this so we got the same data in front of us. Hopefully this is clear for you. What I'm seeing, and hopefully you're seeing the same thing, or do you see a wave count on this section here? What I'm seeing, if I'm looking just totally objective, this will come with practice, either a 1, 2 or a 1, 2. So let's just go here, 1, 2. A nice wave 3, 4, and a 5 of a microwave 1. What typically comes afterwards? Well, if I just, let me just get rid of these lines. I can redraw these in a second because you'll see what I'm doing here. And I'll redraw these as well. Right, what comes afterwards? Well, it's an A, B, C correction, right? And we have to be objective. And I'm saying that because often I see newbies or people that are just starting out. You know, you want something to happen and you'll find a way of drawing a chart pattern that's not really there. So if I was looking at this objectively, I'm anticipating that this looks like a wave A, B, C of a wave B. We're probably going to see a move to the downside, unfortunately, because I'm still holding this position, and it might even go below my entry point, and then a reversal to a new high, right? A new high. So let's just be very, very objective. So let's look at the wave B first. Wave B. Wave B typically similar to like a wave 2, you know, and the minimum maximum is 50% to 78.6, and you see it's just tagged at 78.6%. So this will invalidate this. How would we know that this is not going to be an A, B, C? Well, we'll just need to see a high, this high to be taken out, this one here, and that'll be music to my ears. Oh, this one here. Music to my ears. Music to my ears. I would love that to happen. I would love it to happen. But the probability, looking at the momentum on the daily, the momentum on the 4-hour chart, and just the pattern, it looks like we're seeing. Let me draw this really clearly for you. And this is tough to do, guys, because look, you know, we've got invested interest in this. It looks like an A, B, C of. Let me just get this here. Of a wider A. Let me just get rid of this magnet. B. And what we may see as a C. I'm hoping that makes sense. That's what I'm seeing. So let me just get rid of these trend lines to make it clearer. And then we'll also make these ones bigger. I like to just have my charts as clear as I can. Yeah. So remember, we have larger and lesser degrees on the projections. So there you have it. So what is likely to occur? We can do a few other projections that confirms that this might be a high before, and we might see a wave C. And I say unfortunately because it's not what I want, guys. It's not what I want, but we have to be objective. First, we'll do a retracement of this high to low. And let's put this back on. And the typical retracement is, the minimum is 50%. That's been exceeded already. 62%. That's pretty much been tagged already. So the likelihood is we'll see a 78.6%. So let's just keep that there. This low here. So remember, this green line is just my entry point. So let's just move this. Yeah, perfect. In line with this. So it's nice and clean. Another powerful projection. And if you're long on harmony, so anticipate. Like if this does occur, you need to be prepared for the worst case scenario, because it's all well and good being optimistic. And I'm an optimistic guy. But look, we need the reality check. Look, this is possible that this may occur. Do you hold? Do you sell now? So for my action, it's going to be hold, because I believe, just based on the technical analysis, that we're going to go on to see higher highs. And then, so we have this now price zone, potential pattern unfolded. Let's look at the time. Typical minimum time for an ABC is wave 1 low to the high, and double click, and it's 50%. So a minimum wave 2 correction, it should go beyond 50%, right? And what we're seeing here is just the first leg of a correction. It has nowhere near this 50%. This second upward, which is more like a B of a C correction, and then we're probably going to see a move to the downside. Now, look, this might be a good shorting position, but what I'm looking for is that the market goes to this downside and then probably compound and add to my position with a tight stop loss. And then we should see further high highs. So we're going to see one of two things. This high gets taken out early. That would be great news, because that would just confirm this was an early correction. But we always want to go with the probability, and we may see an A, B, C correction. If that's the case, just be prepared. Worst case scenario, and yeah, take the proper action. So there we have it. I know. So got invested interest in this one, you see, and you know, but this is where the professional level comes in. Where can you just be objective, regardless? So we've got this 1, 2, and then a 1, 2 coming in. I know it looks a bit it's because a lot of information on the chart. But even if we just go back to the daily chart and we just pull it in like this, we've had this nice move to the upside. I know we've got a lot of drawings and we keep them there, but we have to just take it as it is here, right? We have this bearish momentum reversal. We have an A, B, And what comes next is typically a C. We've got a price, we've got a pattern. There is one other thing we should look at. Again, because you have to ask the question of what needs to happen if the wave count is wrong, or if it's going to fold out. I want to look at this wave C here. If I just jump into a 15-minute chart, and more often than not, this will break into like a 1, 2, 3, 4 potential wave 5, and then we'll see a correction. So let's see how this unfolds. So just prepare that Harmony, as I said previously, don't get overly confident right now, because we had a massive bar up. Like, look at this. Like, amazing, right? So this is beautiful. However, unfortunately, we may see a movement to the downside around 11.8 to 12 cents. 11.8 to 12 cents, maybe. One more thing. We can project forward when that will likely to occur. To finish, we can project this forward. If this ends up being the wave B high, we can project this forward. If it lets me. I want this one here. I want this one, and I want this to be a thick line. Oh, perfect. So we should expect by and around the 21st of May, which I think is also the projected date for the Bitcoin low. So it might marry up perfectly. I know someone asked me the other day, do they marry up? Is there coincidence and complements? We do it independently. But yeah, this is just to warn you. Look, I hate to be the bearer of bad news, but I'm long on Harmony myself, but I'm prepared for my profits to be swallowed back up, to go to break even. I'm not adjusting my stop loss because it looks like it's going to be a highly probable zone here. And then we'll make our decisions. But then if that does hold and then we go on to make new highs, what are the price zones that we're anticipating? Just a quick reminder, if you haven't seen my previous video on Harmony, when we entered this, the price targets that we're anticipating are 42 cents, right? 42 cents is the initial price zone, and today it's at around 17 cents, around 2-3x from where it is today. So there you have it, update with Harmony. If you like today's video, like, subscribe, hit the bell notification. I want to bring these daily nuggets to you, just factual information where we can make intelligent business decisions, non-emotional, and we can trade with the trend. The trend is your friend. Ride it until its end, until it reaches its bend. We want to do that consistently. Right, I will see you in the next video.